This is Fintech Insider News. This week, Flutterwave buys Mono, PicPay files for US IPO, and Jamie Dimon is ready to share JPMorgan's secret sauce. We'll be tackling all of this and more on today's news show, so please don't go anywhere.
I had that dream again. My small business needs to hire, but I don't use LinkedIn, and I hire an energy vampire. But also they're a literal vampire. And suddenly my team is spending all their time sharpening wooden stakes and buying bulk silver and rehearsing ancient chants, and then I wake up.
Don't let hiring nightmares ruin your dreams. LinkedIn Jobs' new AI assistant takes insights from over 1 billion professionals to create a short list of the best fits for you. Post your job for free at linkedin.com/quality. Start hiring today with LinkedIn.
Hello, Happy New Year, and welcome to episode 1028, the first Fintech Insider News of the year, brought to you by 11FS, the 5-time consultancy of the year that works with financial providers, big and small, to build the next generation of financial services. I'm Ross Gallagher, head of consulting here at 11FS, and this week I have been having lots of conversations with people who are planning some really ambitious things in 2026, and I'm already hugely excited about what's in store for the year ahead. It's our first news show of the year, so we'll be looking at the top stories of the first week of the year, as well as a few that we might have missed in the dying days of 2025. Remember that? Joining me to help untangle the headlines is our all-star panel, so let's meet them. First up, as ever, a very warm return to Fintech Insider to Sarah Kocianski, Fintech consultant and advisor. Sarah, look, obviously, regular listeners will be more than familiar with you. Always great to see you. Maybe you can just give us a little insight into how your year started.
Well, thank you very much for having me back. Always a pleasure. It's been a good start to the year. It's going to be a very cold start to the year, which is very classic us to talk about the weather. But no, I'm. Most people know this now, but I'm back freelancing. I'm working for myself, which is really exciting. Got a couple of really exciting projects lined up. Most recently, I've been going back to my roots and working on research reports. So I've just recently helped started PR pull together a research report on kind of the importance of communication in fintech. So that's been really nice. So if anybody wants to give me more work doing research analysis and writing reports, I'd really appreciate that, because I'm actually loving going back to kind of where I started.
Oh, that's really cool. Yeah, totally back to your roots. I love that. Awesome. Thank you, Sarah. Next up, we have a Fintech Insider debut for Benjamin Dada, Fintech operator and founder at Condia. Benjamin, welcome to the show. Great to have you. Maybe you can just give our listeners a little bit about yourself and about Condia.
Sure. I'm happy to be here. My name is Benjamin, currently based in London. I spent the last 9 years working at startups, doing everything from product partnerships, operations, and I managed to run a media company on the side. So I wear two hats, one from the behind the scenes and one from the zoomed out position. So Condia is my tech publication.
Super cool. Love that. Well, Benjamin, great to have you. Thank you for coming on and sort of sharing your insights and perspectives. And last but not least, another huge welcome back to the show to Miguel Armaza, the general partner at Gilgamesh Ventures. Miguel, great to have you back as always. How are things going?
Good. Thank you for the invitation, first of all, for the first show of the year. Very exciting. Lots going on in our world already. On my end, I co-founded Gilgamesh Ventures. We're a fintech-focused early-stage VC. We've backed over 50 companies in the US and around the world. And in parallel to that, I also run the Fintech Leaders podcast, where I get to interview, just like you, Ross, some interesting characters and some of the top people building fintech companies worldwide. Thank you for the invitation.
Love that, Miguel. Thank you. Yeah, it's always a pleasure. All right. Well, look, like I said, that's our wonderful panel. So let's jump on with the show and get into the stories. So our first one, we're starting the show with some big moves, setting a statement of intent early on in 2025. So this one comes from TechCrunch with a headline, Flutterwave buys Nigeria's Mono in rare African fintech exit. So Africa's largest fintech company, Flutterwave, has acquired Nigerian open banking startup Mono, bringing together two of Africa's leading fintech infrastructure companies. Flutterwave operates one of the continent's widest payment networks, while Mono, often described as the Plaid for Africa, has built APIs that allow businesses to access bank data, initiate payments, and verify customers. The Flutterwave CEO framed the acquisition as a bet on Africa's next phase of fintech growth. Payments data and trust cannot exist in silos, he said. Open banking provides the connective tissue, and Mono has built critical infrastructure in this space. Now, Mono claims to have powered more than 8 million bank account linkages, covering roughly 12% of Nigeria's banked population, and nearly all Nigerian digital lenders using their infrastructure. Benjamin, I'll come to you first on this. It'd be great to get your perspectives. This feels like, like we said at the top of the story, quite a significant move.
Yeah, 100%. Just because two of the names, they're like pioneers in their space. So Mono is like the leading player, or the last man standing, like we like to refer to it when it comes to open banking in Nigeria. Because in 2021, there were a couple of them that set out to achieve open banking, but then regulatory delays, need to show venture-backed returns in a short time led to a lot of people pivoting or just outrightly shutting down. So when you hear news that Mono, one of the pioneers, has been acquired, then it forces everybody to reset and think about, okay, what's happening in the future of open banking? But more importantly is also who the acquirer is. Flutterwave, they've been in the news for a lot of things, most especially the IPO that is expected to come. So if you see movement like this, they're trying to send some signals about either like the business long-term prospects or about the business, general activity in the market. I would just say that from a more cynical point of view, we can investigate some specifics, and I think we'll do that once we get into the conversation.
Yeah, it's such an interesting one. I mean, picking up on the point that you made about the, I suppose some of those regulatory delays and those regulatory hurdles. I mean, Sarah, we've seen that certainly in the UK and other markets, haven't we? Parallels where you sort of need that regulatory mandate, that regulatory framework to sort of really drive things like open banking.
Yeah, absolutely. I mean, there's two different ways it can go. We talked about this many times before. You mentioned Plaid. There's the US way, where it's kind of the market leads the way, and then there's the UK/Australia way, where the regulators lead the way. I'm sure Benjamin knows a lot more about this than I do, but my understanding is that Nigeria has actually had sort of an open banking framework since around 2021, which is largely based or closest to the UK's open banking framework. So the way they've gone about it is, this was me desperately Googling earlier. So Benjamin, please feel free to jump in earlier if you have more expertise on this than I do, which I'm sure you do. But my understanding is that it's quite similar to the way that the ABIE went about it, which is kind of trying to mandate some standards, trying to mandate kind of, all banks have to participate, et cetera, et cetera. Except what's actually happened from the way of what I understand of how Mono works is closer to that Plaid system, where you've got the users giving the access to banks, which is how they can provide access to such a wide range of financial services providers. And they operate across 3 countries, as far as I understand it as well, which is really interesting when you're going to talk about regulation. So if you're talking about somebody trying to operate in the US, we always say that, they've not got one regulator, they've got every regulator for every state. Well, what's interesting about this partnership is obviously Flutterwave is, active across the continent. Mono is active across 3 countries, as far as I understand it. So you've got one regulatory hurdle, which you start with Nigeria, where it sounds like they've got at least something to sort of vaguely guide them in the right direction. But then you've got to deal with cross-border regulations, and that's going to make things even more complicated. So, I mean, fair play to them. And it sounds like they've got both models in operation, kind of the standard one that we have in the UK, where it's kind of, government mandated or regulatory mandated, plus the sort of Plaid option, which is where you can use those APIs to tap into banks with the permission of the user.
So the difference is, and I did work for one of the players that tried to do this in 2021 before I left. They were one of the ones that pulled out and said, we'll just go back to card. Because most times when you start in open banking, your belief and your bet is that people would do bank-based payments more than card. In Nigeria, what happened is, yes, there were some draft guidelines and stuff, but adoption didn't come from the banks. Because in the UK, the way I understand it is the financial institutions are required to open up their APIs so people can connect and build open banking solutions on top of them. But in Nigeria, like, the banks are still a bit hesitant. Like, we don't want you to, they call it all manner of things, security, or you take customers, whatnot. So most people who play in that space always do reverse engineering. And the impact of reverse engineering is that it looks like you're hacking the
Yeah.
bank's system. And I remember one time I was trying to sell this solution, and one of the bank players just told me, bro, collect your money from this company and leave, because it just feels very wrong. It just feels very weird. So people might argue that, I have direct integrations, but I'm sure many of them just do reverse engineering, either portal emulation or screen scraping. So that leads to the impact on like the user experience. So many people, for them, it doesn't work that much. So when I saw the claim of 12% of Nigeria's bank population, I was like, I think somebody has misinterpreted something, right? If you've connected 8 million bank accounts, the bank population in Nigeria is about 70 million people based on our unique BVN, bank verification number. So what happens is you connect per account, you don't connect per person. So it's not as if when you connect a customer, you've connected all of their bank accounts. And in Nigeria, people can have as much as 5. I have more than 5, right? So it's closer to 2 to 3% of the bank population than 12%. So those are some of the things that we need to clarify, like what do they mean exactly? So if you've done 8 million bank accounts, then that cannot be 12%, because if it's 12%, then you're telling us that the market adoption is really high. Like 12% in like your 4 or 5 years of existence is quite massive traction. So I don't see it that way. But yes, those are some of the challenges. The user experience is not always very consistent, but I think one of the good things that have come out of that whole open banking push is pay by bank as a method is something that the Pay UK of Nigeria, if you're all UK people, so it's something that the Pay UK of Nigeria has sort of developed more broadly. So instead of just screen scraping and reverse engineering, we now have people like Paystack with the Paystack Vault, the authorization stage, the customer can do all of that in a more regulated way versus just trying to hack into the bank system. So that's one good thing. But the open banking itself that makes financial data like customer transactions over the last few months is still not there yet. And personally, I don't know when that is going to be. And I don't know if that's a better one to make between now and the next 3 years. So, we'll see.
Even just understanding that connecting by account rather than connecting by person, and the fact that that's maybe skewing some of these adoption numbers in itself is really, really interesting, and maybe speaks to some of the things you mentioned, Benjamin, around some of the challenges around scale. I guess the sort of interesting angle on this, Miguel, is that, when you think about African fintech, Flutterwave are just kind of one of the first that will come to mind. And so I'm interested in if someone the size of Flutterwave is sort of investing or putting a big bet on open banking, does that almost force regulators then to sort of engage and think about, all right, well, how do we put the regulatory infrastructure in place to do this in a safe, managed way?
If anybody else wants to comment, feel free. Yeah, Miguel.
Yeah, I was going to say it depends on the regulator. Certainly in the US, the regulation can be more reactive. There's a bunch of stuff already happening. We need to regulate it. But there's other places like Mexico, for example, where open banking, certain types of open banking schemes were forbidden overnight by the regulator. And a bunch of companies got caught in the crossfire and had to cease operations, right? Even though they had hundreds of thousands of clients. So it really depends on the approach of the regulator. I'm not super familiar with the Nigerian regulator, right? But that's something I would not say it's a given that if you reach enough scale, you will be regulated. But also going back to Benjamin's point, it seems that there is some scale here, but not massive, right? Not only because of the numbers of connections, but also just look at the valuation, right? $25 to $40 million, that's the reported range. And it's an all stock transaction. And it's Flutterwave stock, which you can debate. What is it worth today? Is it the last valuation at the peak, or is it something much lower than that? But yeah, it's an interesting story. Obviously, it reminds me of Visa Plaid, but this one will actually get done.
I guess, Benjamin, sort of final word to you on this one. I know we've touched on some of the challenges around things like scale and then those sort of workarounds in terms of things like screen scraping and those sorts of things. But are you, I suppose if you take a slightly longer term view, are you sort of more optimistic or maybe more pessimistic about the transformation potential of open banking in sort of Africa moving forward?
The benefits are somewhat clear because some markets have proven it. However, I think I'm just cautiously optimistic because I don't know when that would actually come to life, when either regulation mandates the financial institutions to open up and share this data that people can use to build things on top of. But clearly, like, there's a lot that can be built, solutions that help. And one of the announcements that followed the acquisition was that Mono is now working on a treasury management solution that helps people pull all their bank accounts in one place, which is like a classic open banking thing, because since you already have access to a bank account, you can always aggregate it and stuff. So I would say that, if I had investor money, I'm not going to put that in open banking right now in Nigeria, but we'll see. Because they've existed for this long, a lot of their systems are a bit more mature than when they started. So I expect more reliability, I expect more stability, and they can build a lot of interesting things, right? But I just don't know how far it will go.
Yeah. Cautiously optimistic sounds about right. Yeah, go ahead, Sarah.
One very small point, it's just talking about like the use cases for open banking. It's really interesting that Mono was talking about Flutterwave said it gives them access now to KYC, account verification, etc., which is not something we've seen open banking used for much in the UK. And when I looked into it, Mono has a product which is they will do a very classic what we'd see online KYC check. So you kind of take a picture of your government ID, do a little video, they'll check it's a real ID, you're who you say you are, and then that's it. You're approved. You could do online onboarding. But what Mono then says is that once you've done that, you can then use that across other accounts and Mono will port it for you. I thought that's a really interesting use case that we haven't yet seen in the UK, this idea of a portable identity between kind of banks that are connected to one provider. So I'm just kind of thinking there's kind of some creativity here because I feel like in the UK we've got kind of stuck with open finance, and I just saw that and I thought that's interesting. So that's just the rabbit hole I went down, and I'll step back now and come out of my rabbit hole.
Well, no, I really like that because you're right. They're not just sort of like looking at other markets where open banking's more advanced and kind of going, what can we copy? I think actually building on Benjamin's point around cautious optimism, maybe that's a reason to be a little bit more optimistic as they're looking at innovative use cases. And I really do like that. I think it's a really interesting story. I think it's one that we are going to have to sort of keep an eye on. I am going to move us on to our next story, which comes from CNBC with a headline, JPMorgan forms, quote, special advisory group to share its, quote, secret sauce with clients. So JPMorgan launched its Special Advisory Services Initiative, SAS, for anyone who hasn't joined those dots, I guess, which is aimed at providing key clients and access to consulting services drawn from the investment bank's own practices. They have identified several capabilities to offer clients, ranging from investor relations to real estate selection to healthcare benefits to technology procurement. All the sexy things. The services are intended for clients that have deep relationships with JPM, such as considering them for their IPO advisor. Additionally, right before Christmas, JPM also announced that they are considering offering crypto trading for their institutional clients. Sarah, JPM SAS, what do you think?
Sorry, I don't know if this works outside of the UK. Does anybody else know that SAS is the Special Air Service? Like here in the UK, it's a really elite department of like the armed forces. So I don't know if that's just us having a little giggle or, of course, like the Swedish Airlines Scandinavian Air Services. Yep. Anyway, this caused some giggles in the UK, which perhaps it wasn't meant to. on a serious note, I kind of think this is sort of an expansion of what JPM was already doing, right? They already have an advisory service. That's already a huge part of what they do. Whenever you see like X is IPOing, it's, there's always an investment bank, name behind it saying advised by. And I just find it almost a bit strange that they feel the need to come out and say, oh, we're going to expand that to kind of real estate selection and cybersecurity. It's like, I sort of thought you'd already be doing that as part of helping somebody get IPO ready, because aren't those going to be questions that you're going to get asked if you're heading down that route? Which, it makes perfect sense to me, and I think they are going to give some of the consultancies a serious run for their money. I mean, JPM is moving in every which direction at the moment. So I think, my only takeaway from it was sort of like, right, kind of thought they'd already done that. Have they looked at how this name translates outside of the US?
Yeah, or Scandinavia. One for for the Swedes and the Brits among us. Go ahead, Miguel.
So Sarah has a good point. Advisory services within JPMorgan have already existed within investment banking. That's what they do. But I think that's a very narrow type of advising, mostly focused on M&A and IPOs. Right. I think here they're expanding to compete against, the big four, to compete against McKinsey, BCG, Bain, all those guys. And I'm not sure if it's going to be a loss leader like lending often can be to corporate clients. So you can offer other products, or is going to be as profitable as investment banking advising is. Right, I suspect it might be priced as a loss leader or break even, as a way to just deepen the relationship with other products, maybe non-credit transactional products, and the crown jewel of advising, which is investment banking. But this is the SWAT team, Jamie's SWAT team.
Yeah,
I think when I just wear my media hat, I'm thinking about what are they trying to signal here. Right. So when you see some of the things they highlight AI, cybersecurity, and I'm like, you're trying to put yourself in the conversation that's happening now so that you also feel like you are ahead of the curve. Right. I won't be surprised if they launch a stablecoin advisory service, even though they are not as advanced in that like Visa. Right. So the question for me is, why are you talking about navigating AI? Like, it's just like you're trying to insert yourself in that conversation and make people see you as a company that is already making giant strides and improvements in that.
It's interesting, isn't it? Because I think we've sort of, I suppose, come up with a few different, I suppose, potential drivers for why they're doing this, right? One is sort of, Benjamin, as you were just saying, fairly opportunistic. We know there's some major sort of trends and headwinds specifically around things like AI and stablecoin, and so is this purely reactionary? I think the other is maybe they've spotted a market opportunity and they want to take on some of these big consultancies sort of head on, and they're seeing it as a sort of a new revenue stream. And then the other is, actually, is this just because this space right now is incredibly competitive, and so they're trying to differentiate and sort of steal a march on some of their direct competitors. What's your gut, Sarah? Sorry, go ahead.
Well, sorry, I was going to say, I think there's a question talking about competitors there of kind of like, so say they're going to talk about AI expertise. So there's two potential avenues for them to gather that expertise. It could be the expertise they have within the bank, in which case their expertise around AI will be how financial services companies use AI. So can they extrapolate that to their clients in other industries? Where is this expertise coming from if they're saying AI? And if the expertise in AI is coming from their other clients, so maybe they're working with their other clients to see how they're using AI, how are they going to then prevent those clients? Do you see what I mean? Like, if their expertise is coming from their clients that they're interacting with every day, and that's how the team knows about, this particular use case for AI in whatever FMCG industry, how do they then prevent their clients going, well, we're not going to tell you what we're doing because you're going to tell somebody else as part of your consultancy business? So I'm not quite sure. I'd look at it and go, kind of, you can look at the big four and go, well, okay, what's their claim to expertise? But they can probably claim to be relatively neutral, or at least have, know a little bit about every industry. JPM knows a lot about financial services. So therefore, if they were going to tell me how financial services organizations should be using AI or who should be implementing cybersecurity, yes, I'd listen to them. But are they going to take on their competitors as clients and sell them that advice? It seems unlikely. Okay, in which case, they're advising their clients in other industries. And what claim did they have for expertise in that industry, except that they've got it from their other clients, or they're going to hire in experts? So with my kind of going back to that analyst researcher's hat on, if I'm going to be like, if you're going to be an expert in something, are you an expert in something that actually pertains to me? And how are they going to balance that? I might be slightly confused, but do you see where I'm coming from?
No. It's a really interesting point, because you're right. Like, is this actually JPM's secret sauce, or is this, their client's secret sauce potentially sort of collated, for want of a better word? And then is there inherently a conflict of interest?
Yeah, exactly. Like, and if I'm a JPM client, how much am I going to give you, and how much to get in return?
Yeah,
100%.
Miguel, I think another sort of maybe question mark that this raises, certainly for me, is I think we've started to see the IPO market take off again, sort of tentatively maybe. Does the fact that JPM are trying to put a sort of differentiated position here speak to maybe they're sort of anticipating that it's going to hot up even more?
Oh, yeah, absolutely. I mean, picking your banker for your IPO is an extremely important decision, right? For a CEO, for a board. And typically, they go and work with banks with whom they already have a deep relationship with, that they've known for a while, number one. And number two, obviously, that they know they are well respected in the industry and will get the job done, right? So absolutely, it's all about, in my view, and I'm sure there's more to the story, but in my view, it's all about getting more tentacles around the customer relationship and taking advantage of the brand. I mean, the JPMorgan brand has only gotten stronger in the last, pick your years, in the last 2, 5, 10, 15, 20 years. So it's only gotten stronger. So when you have that strong of a brand, you can capitalize it by offering new products. And absolutely, the IPO, there's very few products that are as lucrative as getting, bulge bracket, left lead position in a big IPO.
Yeah, and Benjamin, I guess, look, again, final word to you on this one. We could not sort of nod to the point that they was reported that they were also exploring providing spot and derivatives cryptocurrency trading to its institutional clients just before Christmas. Again, sort of interesting sort of trend, I suppose. Jamie Dimon, sort of a known crypto skeptic initially, but I guess, again, when we talk about maybe some of what we're seeing in the regulatory space in the US and stuff, again, it just feels sort of natural that they would want to start to move into this space.
Yeah, 100%. So like sometimes you put your personal bias aside to play the game on the field. So if Jamie Dimon had his personal bias about what crypto can do, what crypto cannot do, and maybe his even long-term vision around how it would all convert back to looking like Swift, at the moment, the game on the field is there is a short-term opportunity in the crypto and stablecoin space. And all my investors, my shareholders are asking, what am I doing about it? So being able to do something about it in the short term and just tell them that you're thinking about it is not like you have, you are blindsided, is very useful. So I expect to see a lot more, cautious involvement in crypto, and they're doing the token thing, they're doing a bunch of things, but I don't think they would ever fully become like a community bank that's trying to get business off the back of banking crypto fintechs and whatnot. So all of that is there.
Love it. All right, great. Well, look, on that note, we're just going to take a quick pause here and we will be back with you very shortly.
Hey folks, if you're anything like us, you're on the road constantly. Airports, hotels, conference centres, half the time the Wi-Fi feels as safe as shouting, "My PIN is 1234" across the departures lounge. That's where NordVPN comes in. One click, or no clicks with AutoConnect. And suddenly, every sketchy airport network becomes a whole lot safer. You still get blazing fast speeds and 8,700 servers in 129 countries, so you can switch your virtual location while you're waiting for yet another delayed flight. One account covers 10 devices, and you get Threat Protection Pro to block malicious links and ads, plus Dark Web Monitor if your details show up where they shouldn't. We've teamed up with them to offer Fintech Insider fans an exclusive deal. Head to nordvpn.com/fintechinsider to get a huge discount and 4 extra months on top, completely risk-free with their 30-day money-back guarantee. Links in the description.
Now a quick break from the headlines to spotlight our latest Insights episode, and it's a big one. Netflix, you've probably heard of them, right? Well, they've got over 300 million people paying every month to watch shows such as Stranger Things and, of course, Emily in Paris. So what does it take to handle payments of that scale? Well, we sat down with Netflix and their partner JPMorgan to find out. It's a must listen, and you can find it on the same feed as this episode. And now back to the news. Our next story is another big move, this time the first IPO of the year. Now, this headline comes from payments. Brazilian fintech PicPay files for US IPO as profits surge. So PicPay, the Brazilian mobile banking and instant payments provider, has filed for a US IPO, making it the most exciting Brazilian listing since Nubank's blockbuster debut. Founded in 2012, PicPay started out focusing on instant payments and QR code transactions, but over the years it's grown into Brazil's second largest digital bank by customer base, now serving over 66 million clients and offering an array of financial products such as credit cards, cryptocurrency trading, loans, BNPL services, digital wallets, investments, and insurance. PicPay's latest IPO plans come 4 years after the company abandoned a previous attempt to list on the NASDAQ. Miguel, I know this is something that you've looked at in some detail, so do you want to maybe bring it to life for us a little bit?
Yeah, absolutely. I mean, obviously, this is a story about PicPay and the success that they're having in the last 13 years since the company was founded. But it's also a story about Brazil. And I think it's yet another reminder for everyone to realize that there are maybe 5, maybe up to 10 economies around the world that can produce multiple multi-billion-dollar fintech companies or just businesses in general. But let's zoom in on fintech. Brazil, the list is growing. Everyone knows Nubank around the world. Now people are starting to hear about the other ones, right? And PicPay being one of them. As you mentioned, I've gotten the chance to interview the CEO, Eduardo Chedi, at their offices, at their headquarters during one of my trips to Brazil, to Sao Paulo last year. It's a super dynamic office. The way they're building things is obviously top of the line. But the interesting part of the story here is that they started as a payments company. They were doing Pix before Pix was launched, almost like Venmo in the US for a lot of people who are familiar with it. And then Pix got launched nationally for everyone, mandated by the central government. So what did PicPay do? They essentially reinvented themselves by launching a credit business, which is now close to 50% of their revenue and is what has gotten them over the line from being an unprofitable business to turning a profit for the last couple of years, right? Now, they hired, obviously, a very experienced credit team. You don't get that done successfully without the right people. But yeah, I mean, you guys always said for the last 6 years that I've known you, or credit makes the world go around. And this is another example, right? But yeah, it's an amazing story. I'm watching it very closely, and let's see when they actually go out. Should be in a couple of weeks.
I mean, well, look, we asked you to bring it to life, and you've definitely done that. I think there's a lot of excitement about this one. Couple of points, I suppose, that you made that really sort of resonate. It's so interesting that it's a success story, but it's a success story sort of built on like resilience. And as you say, when Pix got launched, I mean, that could have been the end of them, but the pivot and profitability and all of that sort of stuff coming after is really quite an achievement. But then, Sarah, I think the other point that's really worth maybe reinforcing is Miguel's point about Brazil and just the scale. I mean, it's staggering that you can be the second largest digital bank by customer base with a customer base of 66 million clients.
Yeah, I mean, Nubank was one of those, one of the first ones digital banks that we first really sat up and took notice of at 11FS, arguably a long time after we should have done. But back in the days, when I was working with you guys, and I still remember when we spoke to their founders and we asked them kind of like, what's the secret to your success? And they said, well, we've got an awful lot of people and we've got some of the worst financial services infrastructure in the world. And so that gave us a really, really good opportunity. And to Miguel's point, from what I remember, the early conversations with them were particularly around credit, actually, and about how in Brazil, kind of credit was just formal credit was just priced to the point where the average person on the street couldn't afford any form of credit, whether that's a credit card or a loan. And I don't know how much that situation's changed in the interceding years, but yeah, I mean, I think the point is that when you have a huge population and a financial services sector that fails them in almost every front formally, that's going to open your way to innovation, and it's proved itself to be the forefront. As you say, they can be the second biggest with 66 million clients. I wouldn't mind being the second biggest, to be honest, with that kind of market behind me. I don't know as much about the Brazilian market as I should, but yeah, we always seem to see really interesting, innovative things come out of there. And obviously they do them well, because otherwise they wouldn't maintain that number of customers and somebody else would overtake them, because obviously an awful lot of innovation going on over there.
And by the way, the third and fourth largest, they have north of 30 million customers.
Yeah, it's insane. And that's such a fertile ground for opportunity as well, to give you kind of that kind of population and that kind of, and also what's interesting as well, from my point, to go back to that, the failures of the kind of legacy infrastructure, if you like, that many people are willing to take a chance on a novel product. And that shows that A, that there was a big problem, and B, that they're doing it right.
Yeah, I mean, I suppose, Benjamin, that to me is the sort of standout thing. It's like you had a huge proportion of the population who were sort of underserved by the incumbent providers, overcharged. And so I suppose in that sense, there was a lot of value on the table. There was huge consumer appetite for something different. And so these guys have come in and capitalized on it.
Yeah, 100%. We have a similar tale with digital banking in Nigeria. And I don't know if Miguel would add Nigeria to one of the economies where people can build many billion-dollar companies. But what I would say is something we always keep at the back of our minds is whether the number of new fintechs offering digital banking is helping to expand the penetration of bank, increasing the bank population by like net margins, or we're just recycling the same set of 5 million people across each fintech, which means everybody just, the same set of people that have piggyverse, same set of people that have all of this and stuff. So I checked Brazil's bank population. I think it is 88%, which is quite high. But I don't know if, for each of these top 4, top 5 players, they've all contributed to expanding the number of people that come into the financial space, the financial inclusion talk and all of that. So yes, I think, for us in Nigeria and like many of other African countries, there are incumbents who have slept, and some well-backed fintechs are taking over. Some are not even local, some are foreign. Like OPay in Nigeria is a Chinese company, but they are leading in the personal digital banking space. And then we now have other guys like MoneyPoint, etc.
Yeah, absolutely.
If I can quickly add, Benjamin.
Yeah, please.
So I'm trying to pull the numbers exactly, but it was not 88% back in 2012. I believe it was, the number that I'm seeing now, it was about 56% back when PicPay was getting founded, and which is close to the date when Nubank was getting founded. So in Brazil, they've expanded the banked population by 30%, which is about 60 million people, maybe more, right? So It's insane and incredible what the fintech story has done for the people of Brazil, and this has been mentioned many, many times. But there's also another player here behind the scenes, and that's the central bank, because the Brazilian central bank is just a force pushing forward innovation and setting up guidelines that encourage fintech experiments. So that's also an interesting part of the story that has to be constantly celebrated.
And Miguel, one sort of final question on this one. I know they sort of abandoned a previous attempt to go public a number of years ago. Do you think they're just in a better place now in terms of actually sort of going through with it?
Absolutely. They are actually glad they abandoned the previous plans. They didn't tell me that, but I'm pretty certain they're glad, because they were a loss-making institution back then. So their numbers actually would have suffered in the public market, right?
Wow.
Their stock would have been extremely rocky. Whereas now, they can defend themselves. They can stand on their own 2 feet. They're profitable. So yeah, just vastly, vastly different organization.
Yeah, I mean, you're looking at 1.3 to 1.4 billion in revenue and income, and sort of roughly sort of 58 to 60 million dollars in profit. So I mean, yeah, the as you say, just that timing, the position that they're in, it makes a ton of sense. All right, I'm going to move us on. Our next story is one that came through actually at the end of last year, which was after we'd recorded our last news show. So apologies, it's a couple of weeks old now, but we thought definitely still worth a mention. This one comes from Fintech Finance with the headline, Mercury applies for OCC National Bank Charter to become the bank for builders. So Mercury, the fintech business banking platform used by more than 200,000 companies and individuals, has applied to the OCC for a national bank charter and has also applied to the FDIC for federal deposit insurance. If approved, the charter would allow Mercury to operate as a regulated national bank rather than relying on partner banks to provide banking services behind the scenes. Mercury says a charter is the next step in its mission to deliver, quote, radically different banking, combining software built for speed with the stability and trust of a regulated institution. The company claims it is operating at significant scale with $650 million in annualized revenue, 3 years of GAAP profitability, and that 1 in 3 US startups uses Mercury. Miguel, maybe we'll come to you first on this one. I mean, in terms of some of the numbers there, they do point to some real scale. What do you think, is sort of driving this decision from Mercury? It's interesting what they say about this sort of driving the next phase of their plan and sort of delivering that radically different banking.
I think it's a couple things. Number one, if you were ever planning to get a banking charter, this is the time to do it, regulatory speaking in the US. So they know that, we know that. So that's not one reason why they're doing it. There's another reason, if you think about it. As a bank, you are valued very differently than a tech company, right? You're essentially valued on book value, and you can be below book value, 1x to 2x. That's where most banks are. Or if you're a very tech-forward, fast-growing bank, you can be at 3x or more, but not a lot more. And so the way I see it, especially since Mercury has taken traditional venture funding, last one being led by Sequoia, is they are pretty certain and betting that they're going to be able to reach very large scale that will allow them to make it worthwhile for their venture investors, right? So they're saying our revenue today might be, I believe, right, 650 million or something like that. They're saying we can 10x that. We can be at a different scale. And honestly, the world outside of fintech, last year, I think, woke up to the fact that there are going to be multiple fintech companies that will cross the $100 billion valuation mark. I'm pretty certain of that. We're already seeing it. And Mercury is saying, hey, we can get close to that, right? That I don't think that's an exaggeration. And obviously, finally, if you control your destiny with your banking license, obviously you don't have to deal with the entire, BaaS sector, which has given Mercury quite a few headaches.
Yeah. Yeah. So in a sense, it's kind of like kicking off those shackles and sort of backing themselves to go really, really big. What was your sort of reaction, Benjamin, to this story? What grabbed you?
This is a bit personal because I come from a market where Mercury had to shut us out for whatever reasons. I think it was tokenization. They just wanted to show that their compliance is better, and they're like, hey, see, we shut everybody from Africa out or something like that. But what I would say is like, Miguel is right. Everything always happens in cycles. I remember when the first set of cross-border fintechs from Africa started, they built on that whole 2020 broker deposit rule and all of that because it was a bit lighter then. So many of them launched solutions. And now anybody that is thinking of getting a banking charter in the US is probably thinking now is the best time. Many people that even abandoned it then have gone back to Troutman Pepper and other people to say, hey, pull back my application. So if that was always their plan, then it's there. But what I think is the question that I have in mind is still not answered. Does this make them less, more conservative or more bullish when it comes to acquiring customers from non-US markets? Because every time you have to issue accounts to non-US residents, your compliance guys are having a headache, right?
Yeah.
You're filing STRs every time because you're not quite sure what the flow of the fund is and what they're trying to do, etc. So now that they're getting a banking license, are they trying to say they sort of saturated or they want to take a step back and go deep versus acquiring more customers? Like, it's not yet clear to me what that life after getting a banking charter would be like. But I always think that if there are banks like Evolve and other people who might need to serve fintechs that serve international customers, maybe they will be able to figure it out and still serve some international customers. But usually the closer you get to the metal, the more those risks really impact on you. So I think that the overhead would actually lead them to reduce their international activity. But yes, if you are trying to just make money from doing less, quote unquote, you can make money from deposit interest, you can make money from lending. Those things were not directly available to them when they had to make a lot of money from fees and stuff as a fintech bank and stuff like that. So I if I was an investor and I heard Mercury is doing this, I will be half and half. I'll be half and half because now with stablecoin, there are going to be a lot more fintechs offering USD bank accounts to people in international markets, which is quite a lucrative space. So getting a banking charter makes you more defensible. However, I don't know what that means for their long-term growth in terms of acquiring more customers across the world. Yeah.
And I think the really interesting point that you made is sort of scaling to hit some of the numbers that we've talked about. There are clear trade-offs, and maybe you've got to lower some of the bars around, restrictions and all of that sort of stuff. So that's not necessarily a straightforward journey. It's an interesting story. Sarah, what sort of stood out to you about it?
Well, I think the points have already been made and made well that kind of now is the time to do it if you're going to go after a US banking charter. I mean, they didn't have the same sort of approach that we had here in the UK and in certain parts of Europe, like after the last financial crisis, of trying to make it easier for people to get banking licenses to encourage competition in the market. That didn't really happen. There were some stalled attempts 2016, 2017, but political climate in the US changed so rapidly that it put the brakes on that. So I think it's interesting. I think it kind of, whether you go for a charter or not, it depends on kind of what your business model is. So do you want to go deep into the vertical? Do you want to do, all those ways to make money that Benjamin just described? Or do you want to have that attitude, to use that phrase that's been kicking around for 20 years? Do you want to use a bank as a dumb pipe and you're going to build something really good and sleek on top of it? The banks are good at moving the money, just let them get on with it. You don't want to get involved in that regulatory kind of mesh. And I suppose there's two ways to look at it on that. We know that getting a banking license is hard, keeping it is even harder, right? You can get it and then you've got to maintain it, and that means a huge amount of oversight, huge amount of compliance, lots of talking to regulators. Regulators never move very quickly, with the best will in the world. They can't move very quickly. So when you want to go and try and do something new, you got to go speak to the regulator and say, we want to do this. They're going to, it's going to take us 6 weeks. So it can kind of slow you down from that perspective. On the other hand, if you're the one with the direct relationship with the regulator, is that easier than trying to go through a partner bank? Because Miguel mentioned it, but the BaaS space in the US just sort of spectacularly imploded there for a bit.
Yeah.
Is that something that people want to pull away from? So I guess it depends on A, what the business model is you're going after, and B, kind of like what kind of relationship with the regulators you want to have. I think it's going to be, that space particularly as well, like you've got it here in the show notes, but you've got Mercury, you've got Brex, you've got Ramp. They're all trying to sort of fit themselves into this, into this kind of serving small businesses ecosystem. And it almost seems like they sort of sat down and gone, right, you take that bit, I'll take that bit. I think the other thing that's just finally worth pointing out is that I've mentioned it already today, but there are so many different ways to get a banking license in the US. It's not like in the UK where you go to the FCA and the PRA and go, right, we want a banking license, let's talk to you. You can go through the AUCC, you can go through the FDIC insurance, you can go through kind of different state charters. There's a million different ways to do it. And I think that would be the bigger question for me if I was trying to do this, saying, right, we're going to get a license because it suits our business model. Oh my God, which sort of license do we want? And then where does it let us operate? So the US regulatory space has always been, and I don't see this ending anytime soon, a complete mess.
I think that's kind of my key takeaway, is almost that like it's one of those cool stories, but it raises more questions than answers. So it's one we're definitely going to have to keep an eye on. All right, on that note, we are just going to take a quick pause here and we will be back with you very shortly.
Oh, it's such a clutch off-season pickup, Dave.
I was worried we'd bring back the same team.
I meant those blackout motorized shades.
Blinds.com made it crazy affordable to replace our old blinds.
Hard to install?
No, it's easy. I installed these and then got some for my mom. She talked to a design consultant for free and scheduled a professional measure and install.
Hall of Fame son.
They're the #1 online retailer of custom window coverings in the world.
Blinds.com is the GOAT.
Visit Blinds.com now for up to 45% off site-wide, plus a free professional measure. Rules and restrictions apply.
Okay, now for a quick look at one story we didn't have time to cover in full. This one comes from Finextra with a headline, UK cash withdrawals rise for a 4th year in a row. Cash withdrawals from ATMs hit £4.2 billion in 2025, surpassing the previous high of £4 billion in 2017. This is from data from Nationwide. Nationwide recorded around 34.7 million cash withdrawals from the 1,270 ATMs at its 605 branches last year, an increase of around 6% on 2024. The average amount of cash withdrawn went up from £113 in 2024 to £120 in 2025. However, despite ATM usage rising, bank branches continue to close. 6,626 branches have shut their doors since January 2015, averaging around 53 closures per month. I mean, just very quickly on this one, I think cash withdrawals and cash usage really is, I suppose, one of the great bellwethers in terms of how the population is feeling, how they're feeling about their personal finances, how squeezed they're feeling. This increase in cash withdrawals, definitely a continuation of a trend, certainly, that we've seen over the last number of years in the UK. I don't think it'll come to a surprise to anyone that people are still feeling enormously squeezed off the back of the cost of living crisis. Obviously, what stands out here is the fact that, we're losing branches, we're losing ATMs. Of course, there's a disproportionate risk when that comes to sort of vulnerable populations, vulnerable communities. As much as banks need to think about business models and cutting cost out of their operations, obviously we need to make sure that people are serviced and have access to the things that they need to be able to get the most from their finances. And finally, one more story you might have missed over the festive period that is slightly unusual. This one comes from Reuters and 7 News with a headline, "Thieves drill into German bank vault and make off with millions, but they did pay for their parking." A gang of thieves drilled into a German bank vault over Christmas and made off with tens of millions in valuables. And then one of the robbers is caught on camera, still, of course, in his balaclava, calmly paying for parking. Not only that, he comes back with more coins because he realizes he hasn't paid enough, which is an incredible moment of civic responsibility immediately after a major felony. Sarah, what are your thoughts on this?
I don't think it's civic responsibility. You can't get out of the car park if you don't pay.
Maybe that was it. It's all part of the getaway.
They took, if you look at the news story in the video, they drilled into this bank, stole, emptied the vault, whatever they did, carried it calmly into a car park, put it in the back of the car. But then you can see the picture of them. There's a big bloody great barrier in front of them, which is why they're putting money in it. Because if they don't put the money in, the barrier's not going to open. Then they're going to smash through a barrier, and that will alert people to what they've just done. Because when you read the story, they robbed the bank on the 24th, but nobody noticed till the 28th. So,
Incredible.
if they had smashed through the barrier on the 24th, people would have noticed them. So, whilst I understand the levity, I think it's actually just very pragmatic on their part.
It was all part of a smooth getaway.
It is, jokes aside, it is quite sad because I was reading about this and we have talked about this in this podcast before, but a lot of people in Germany are still very cash reliant, which ties into the previous story. And there's a couple of people who said their entire old age savings were contained in cash in the vault of that bank. Now, I'm assuming the bank is insured, but it kind of makes me think about A, the use of cash, and B, the different ways different countries approach it. But yes, I think they're just very pragmatic bank robbers. I mean, get out quietly.
Yeah, well, that's it. I think, we talk a lot on this show about all of these great, sort of digital innovations and stable coins and AI and all of that sort of stuff. But I guess, Benjamin, sometimes you just can't defend against a great big drill.
A drill and some coins to put in the meter.
And some coins to pay for parking.
Fair enough. I was thinking if you were going to commit a robbery, why don't you just finish your act and smash through the barrier? Why are you even bothering?
Yeah, do it in style, right?
Sarah, do it in style. But like Sarah explained, maybe that was a calculated move and good stuff. I imagine is there anyone that has ever tried to do this to just make the weight of what they've done look smaller? Right? Maybe somebody actually robbed somebody and then maybe you gave $5 to a beggar on the street. I don't know. Might be an interesting thing to find out.
They messed up by not having a getaway driver that would be circling around without the need to park.
Yeah, but I don't know. Then if you've ever been to try and pull up on the streets in Germany and you're trying to load the car, they're very hot on it over there. I think.
I love it. This is all just like they've just been super pragmatic, right? Like they've gone in and parked where they could, and they sort of got out when they've needed to.
I thought about this far too much, haven't I? Sorry.
No, it's good. It's good to have a super informed perspective. All right, look, let's leave it there. Thank you so much to today's guests. Maybe we can do a little virtual sort of round the room. Where can people find out a little bit more about you and your company, Sarah? Let's start with you.
You can find me on LinkedIn at Sarah Kocianski. So drop me a line if you want to make me happy and give me some more work doing research analysis and writing research reports. But yeah, you can find me on there. You can find all the stuff I do. More than happy to talk to anybody who's enjoyed the podcast today.
Yeah, we'll definitely do it. You won't regret it. Benjamin, how about you?
Yeah, I'm also on LinkedIn, Benjamin Dada. The name of my platform is thecondia.com, but it's like not just me writing there. So I think LinkedIn, if you want to get me, or Twitter, I'm actually on Twitter at DadaBen_.
Amazing. All right, thank you, Benjamin. And how about you, Miguel?
Yeah, LinkedIn is great. Miguel Armaza, if you're starting to build a fintech company, I'd love to talk to you. Also, website is gilgameshvc.com or Fintech Leaders, whatever you like to listen to podcasts.
Amazing. Thank you, Miguel. And as for me, you can find me also on LinkedIn. That's Ross Gallagher. If you want to learn more about what we're doing in the consulting business at 11FS, it's 11fs.com/ventures. That wraps up today's episode. Thank you so much for listening to today's show. If you like what you heard, please make sure to follow us on your favorite podcast platform of choice. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thank you again, and goodbye.
Well, the holidays have come and gone once again, but if you've forgotten to get that special someone in your life a gift, well, Mint Mobile is extending their holiday offer of half off unlimited wireless. So here's the idea. You get it now, you call it an early present for next year. What do you have to lose? Give it a try at mintmobile.com/switch.
Limited time 50% off regular price for new customers. Upfront payment required. $45 for 3 months, $90 for 6 months, or $180 for 12-month plan. Taxes and fees extra. Speeds may slow after 50 gigabytes per month when network is busy. See terms.